All right, folks. Good morning. Very busy morning ahead. We got Mnuchin and Jerome Powell, the Fed chief, up on the Hill, and that's going to be potentially market moving. Got off my call this morning. Seems like some people think Powell might put the fear of God back into the market like he did last week to take a little bit of froth out here. So we'll cover that in a couple minutes. Got some Apple, got some EWZ, got some Amazon's up like 57% in a day. That bull put spread, so I might look to close that out. That hits my SOP, right? Anything hits your personal SOP, you should execute. So I'm taking a look at maybe getting out of that. All right, welcome aboard our primary brief. I think I have some trader or some other lecture this afternoon I'm doing somewhere else. And then Thursday, we're not going to be doing a weekly debrief. I'm flying up to Fairhope, Alabama, to go do an L39 debt or detachment. So we're going to not do that. Yeah, WisDeFly Thursday, exactly. that's the new indicator. Okay, make sure I got my split screens on here. Okay, good. Yeah, and I'm actually, yeah, it'll be fun. I'll just follow the social media stuff there, and I'll be posting pictures and stuff like that. I think there's like 15, 20 airplanes going up there. I'm actually looking at getting one for the foundation. Or TGO and flying folks around. Like it's interesting because in a fighter squadron, you might have 200, 300 sailors and Marines, and they never get to fly in a fighter jet, right? Maybe one, the sailor of the year gets to go fly in the back seat of a jet. But I'm gonna, try and get as many veterans flying as possible to put a smile on their face and thank them for their service. Okay. All right. Okay. All right. Let's go ahead and get airborne. Really interesting market action yesterday, obviously, with Moderna, but what Moderna did after the close, little pump and dumpish. Still shit show down in Brazil. Bolsonaro still completely unglued. Sao Paulo hospitals, all the major hospitals in Brazil are overflowing, and it's not pretty down there. EWZ, I was thinking about legging into an Iron Condor on EWZ, and it's maybe the 22.5, 22. We'll talk about that in a little bit, but holding on to the bear call spread from the weekly options yesterday. This thing just doesn't want to go down, which is interesting because it makes the premiums a little higher. You would think with a chart like this, I was talking to my buddy this morning about this. So this kind of looks known, right? So there's the overall world implosion back in February, March, and then this thing's just skimming along the treetops there. Look at that. Falls off a cliff and then just stays level. Well, what's interesting is with all the bad news out there and everybody and their mother, including mine, expecting EWZ or the Bovespa to implode, it doesn't. So, but the premiums are higher because that's what people are expecting to happen. Yeah, it's not that much oil-ish because remember back here, oil became a teenager, right? Oil was literally a teenager, and a lot of the Brazilian companies didn't get well, the Bovespa didn't super react to that. Petrobras, was it Vale? Some of the other ones, but still, this is it's just very interesting price action. It's caught the attention of a lot of folks. A lot of my buddies who had never even heard of EWZ or followed Brazil are following it. I'm kind of like their subject matter expert for EWZ. Okay. But how about this? So did Moderna just pull off a giant bait and switch? Companies sell stock after market moving rally. This was last updated last night at 9 p.m. This was really interesting. Moderna priced its stock offering at $76 per share. This price represents a 5% discount to Monday's last sale. It took place on the same day the shares jumped 20%. after obviously what they reported. It's a 309% rally this year. Again, if you guys still in those Moderna calls, there's your retirement. Morgan Stanley had initially offered the shares at 75 to 77.50 each. Moderna said it was raising 1.25 billion through the stock sale and would use the proceeds to fund manufacturing of a coronavirus vaccine. There's that V word. Like I said, buy with both hands. Buy the market with both hands whenever you hear the V word. Insiders did not sell shares in the offering, but judging by their history of selling, we doubt they will wait long before resuming their dumping. Really, really interesting price action after hours. Look at that. So plus, and we've had a great discussion, especially Bill over here. We got Doc, we got Bill. I'm going to read this because Bill, he's a smart dude. Everyone is putting so much stock in a vaccine. The only true immunity is natural immunity. Viruses change so often, making a vaccine against one or two of their makers will only cause it to morph and change. That's what viruses are, living things, folks. They want to live and change to make those particular vaccine-induced antibodies useless against it. There's no vaccine against HIV, Ebola, and the dozen other deadly hemorrhagic viral diseases afflicting the world. We can't fool nature, even though many scientists think we can. Many think we know so much about our bodies, our immune systems, but we don't know shit. Convincing the world that we have a vaccine is a fool's errand. We will have to devise some adequate treatment regimes like we have for HIV. This is truly a perpetual viral disease, which we don't think it is. Very, very well said, folks. Listen to that. That's very, couldn't say it any better. I mean, Bill knocked it out of the park with that, and he's right. I mean, you look at Dr. Birx or Fauci, these people have been working on AIDS for 30, 40 years, and we got nothing. We have a, we have a drug cocktail or this or maybe prolong. I mean, look at Magic Johnson, folks. He's perfectly healthy, right? No, he's not. He's got HIV or AIDS, whichever one. Or was that Kirk? Who wrote that? No, it was Bill, folks, right here. That says Bill. Oh, no. Oh, Kirk, writing to Bill. Duh. Good catch, man. So that's Doc Moore right there. Doc's a smart dude. And, how about Neil Cavuto yesterday, just ripping. What a jacket. He's such a piece of shit. First of all, I can't stand his voice. And second of all, I just can't stand him. He needs to go from Fox. If the president wants to take, he's going to kill, he's going to die. And Nancy Pelosi, he's morbidly obese. Look at this. Pelosi, he's morbidly obese. Cavuto stunned. Could lose your life. Heart attack. Liberals are going ape shit. Absolutely ape shit. The God forbid the president. Where's all the liberals with body my choice bullshit? President can't take whatever he wants to take. How dare these people? Cavuto needs to go with his lover ship. Yeah, the Drudge Report's he's an anti-Trumper now. So, but this really is turning into a joke. Mayor de Blasio. If anybody goes swimming on the beach, you will be dragged out of the water. I mean, you can't make some of the stuff up that is going on. At Scarborough, that scumbag on MSNBC, the president's lying. He's not taking it. He's just trying to talk it up. So the 10-page letter that the president released from the White House doctor is a lie. Oh, okay. So it's bad. This is bad. I never thought our country would end up looking like this. Okay. Anyway. Fearing an imminent top, companies flood the market with stock for sale after the close. So there's a lot of, not only Moderna doing it, but there's a lot of public companies that are, dumping a lot of stock, right? And that's usually not there's a big list of them right there. That's not usually a good sign. Also, yesterday there was another one of these, here comes the retail traders, jumping into the pool. It's like that scene from Caddyshack where it was caddy swim hour from, 9 to 9:10. And they all come running in. And here comes the retail trader. Um, so and here we go. S&P futures failed to break above 3,000. So now what are we looking at here? What did I mention yesterday? I said a quadruple top. I got it wrong. It's a triple top. I kind of called that. So 1, 2, 3. So now we're looking at a triple top, which can be pretty bearish. However, and the what was it, the Bank of America Global Manager Fund Survey? Yeah, Bank of America Global Research Fund Manager Survey. I think we need 5 more words in there. Who's responsible for naming these things? Add a word. Most investors don't think this rally is for real. Again, remember, folks, markets climb a wall of worry. They take the elevator down, or the window. We took the window down here, and they climb a wall of worry up, all the way up this thing. This is, I thought in the fall, one of the most overused phrases were, the most hated the most hated rally, right, was back here in the fall. The FOMO, the Fed, you name it, share buybacks. But look at this. I mean, everybody's trying to talk this thing down, right? The term implies that even though this rise in the market meets the 20% benchmark gain for what defines a bull market, the fundamentals tell a different story. I mean, this is, it's funny that people actually take the time. Where's the scatter plot? There's like a scatter plot of the 2/3 of fund managers say stocks are still in a bear market. First of all, I don't care what a fund manager says. I'm my own fund manager. Second of all, look, it'll be U-shaped or W-shaped, 75%. It's a bear market rally, 68. It's a bull market, 25. It's a V, 10. Okay, so those opinions are as varied as people in this room. So you could be a global fund manager. I mean, it's just, I know you can, right? I'm halfway through like billions. It's funny because it's a good show, and it really does show you that they do a good job of depicting the smart money as really not that smart. Exactly, Karen. Who cares what these fund managers say? I really don't care. I just think it's comical that they're arguing about what this rally is when we're 30 some percent off the bottom here. So I think there's a lot of miserable dudes and ladies out there who missed this, right? Who didn't. You guys were here, man. I changed from a W in the blink of a Fed announcement and said, done, smoking a hopium, baby. It took me 3-4 weeks, 7 years ago to unfornicate my thought process of not fighting the Fed. So when I saw the Fed coming in this time in top rocky, beaten creed physical shape, I said, done, bullish. So it's just, I bring this up because all these fund managers are tripping all over each other trying to name what this is instead of doing their job and making money. It's comical. It's so fun. It is. It's comical that they're tripping over each other to try and label something that they're missing out on. And of course, they're loath to get in right now because now they really, really think it's overextended and it's going to do that. But I'm going to say this every webinar. You want me on that wall. We need a Colonel Jessup moment. You can't handle the pullback. I mean, we will. If there's a seminal event, if there's a something, I'm telling you, man, it's got to be an event. Again, my notes are in the office from the call this morning. The agreement kind of is, it's not a drip, drip, drip of bad news that's going to cause this thing to roll over. We're getting the drip, drip, drip of bad news, right? And if so, Jeffrey Gundlach can't be right. He can't be right that we retest these March lows because it'll be devastating. That will be the Great Depression. If this market, look at how far that we would have to go to retest March lows, and he's wrong. We're not going to retest the March lows. We're not going to, whatever causes us to go down to here won't stop at the March lows. It'll be lookout below. And Jeffrey Gundlach won't want to be right at that point because people will be wanting to put his head on a spike, escape from Los Angeles. It'll be on a bridge. So you don't want some of these people to be right, some of these bears, folks. Exactly, Karen. Some of the Dem governors are actually working on it. They're trying their best, but it's just simply not going to happen. The best part about this whole COVID thing is I figured out who the modern day redcoats would be, or who the modern day colonialists or Americans would be that sided with the Brits, right? We got a lot of Benedict Arnolds, but um, even Democrats are starting to see it. I mean, Gavin Newsom, what a awful human being. Well, if we don't get a federal bailout, the first people that are not getting paid are first responders. Is that a threat, you piece of shit? That you gave $300 million to illegal immigrants? What a disgrace. So even the random Democrat friends that I have are like, oh my God, man, you can't. And only their scuzzy supporters would support. The Journal had a great op-ed the other day. It's like, should Florida bail out New York? And it's a tale of two governors. Rick Scott, who was our governor and he's now our U.S. senator, versus Andrew Cuomo. They were elected the same year. And take a look at the math and what each did in each state. This is a shithole. This is not. So maybe it was just the two different guys, or maybe it's the policies. So a reckoning is coming with Nancy's bailout. A lot of Americans get pissed off. We don't mind helping people out, but if you're going to try and use this for Florida to rescue New York's bloated pension funds, it's not going to happen. So we got, this phase 3 that was supposed to be last Friday. We were supposed to be talking about it last Friday. You haven't heard a word from it because there's a lot of horse jockeying on behind closed doors. Democrats want a bailout for all the crappy Democratic states and cities, and Mitch McConnell wants what? Lawsuit protection. Businesses who open up, I got COVID here and I'm suing. Well, so the trial lawyers, obviously, who are Democrats, support that. And then, it's going to be interesting either way, man. So, yeah, exactly, man. Florida and New York. Oh, I'm sorry. Yeah, balanced budgets. So it's going to get interesting. So we talked yesterday about Jerome Powell and just how he. I don't get how these people, these fund managers, quote unquote, what are they new? Did they not live through the last Fed, right? Did they not? Where were they? Or what are they? 20-year-old fund managers that were in college when this last thing happened? And if they were, they should have studied more, right? But today, so they're talking right now, and it's virtual, which is, pretty funny. It just doesn't have the power of like live testimony. It just looks bad. I'm getting out today, man. I think I'm going to go to Lifetime Fitness, see if that's open. It's just, and the masks are stupid, folks. Do you know how small the COVID? People are wearing a T-shirt over their face. It does absolutely nothing. It's more about control than anything else. You guys know me. I did my best Paul Revere at the beginning of this thing back in January, and then since we blew it, now it's just too late. We just gotta open up. So, but these guys are talking today. And I expect once they get to the questions, of course, Democrats will be Democrats, Republicans will be Republicans. They want to know how this money is being spent. Still got buddies. Round 3, folks. Round 3 of trying to get approved for a PPP loan, and still not getting approved. It's a disgrace. So they have a political problem, right? Lawmakers likely to press Mr. Mnuchin on how much risk the government is willing to take on its investment in the Fed's lending facilities and whether he is prepared to lose the money Congress provided to ensure credit is widely available. It's the look, it's somebody had a good quote this morning. It says it's the solvency that's the issue. It's not the liquidity, folks. $10 trillion in liquidity is the issue, not I'm sorry, it's the solvency. So anyway, this will be interesting, but obviously we're talking during this, so I'll have to get the cliff notes. My calls all listening to it, so I'll get those cliff notes. But this is Jerome's next big test here, right? Is lending directly to businesses. The central bank's Main Street lending program is shaping up to be one of the trickiest things it has ever done. Whenever you see something like that, it's the trickiest thing the Fed has ever done. There's a saying we used to use in fighters. We're either going to succeed on this mission or we're going to die trying. I think that's what the Fed is doing right now. Mnuchin, Powell, and clearly Donald Trump are all kamikazes right now. They're going to succeed or they're going to die trying, or I guess it's both in the case of a kamikaze pilot, right? This is we are way past throwing the kitchen sink at this thing. This is insanity with how much liquidity and what they're trying to do to save the economy here. I have a really crazy idea to rescue and to bail out everybody that needs to be rescued and bailed out. Open the country. There's the answer. How do we get the economy going again? Stop. Anybody goes on the beach, anybody goes in the ocean, I'm going to arrest you. Are you shitting me? This is the same ass who in February is like, let's all go to Chinatown. And it's a disgrace. Like a good Democrat once said, right, Rahm Emanuel, never let a crisis go to waste. Well, Jeff, yeah, exactly. Hey, man, here's another radical concept. You're scared to leave your house? Don't leave your house. How about that? I'm scared to go to a restaurant or go flying. Then don't. Me, I'm not. My body, my choice, right? I seem to remember that chant somehow. But again, you cannot understate what this man is doing and what he said the other night on 60 Minutes. Yeah, Ray, there's a lot of people. There's a lot of people who are getting sick that the government is literally telling them how to live their life. That Michigan governor, Whitmire, whatever, what a disgrace. That's a tyrant, right? You can't buy seeds, but you can do this. I've never seen such stupidity. Thank God that some local cops and sheriffs are starting to wake up and we're not going to follow any of that. That's not, I think it's bad when our country has laws that say, hey, during a time of crisis, an executive order can be written by a governor that has the weight. It's a law. No. I hated when Obama, remember his famous, I got a pen and a phone. I don't need Congress. What did you just say, King Obama? So we've seen what happens when we give the government a little bit of power. I reposted the Bill of Rights on Facebook the other day, reading those things. Remember, Constitution and the Bill of Rights. The Bill of Rights was like we the people want to just make sure you heard us. We give you rights, not the other way around. And we can take them back. We got rid of a king. We can get rid of you, right? So people tend to forget what the Bill of Rights are. So yeah, exactly, Karen. They all do look pretty damn good, right? So I was shocked when he said that. You know what? I wasn't. When the Federal Reserve chief says, "Hey man, we can print it digitally. I got cash, baby." Again, I read these headlines or I see Jerome Powell talking. I'm furious. I want to run for Congress or president or governor and go, nobody has to pay taxes anymore. We have a printing press. Why are you paying tax? Talk about, that sounds like Obama, right? I remember Mitt Romney. What a jackass, Mitt Romney. You can't. How do you run against Santa Claus? He literally said that. Obama's like, free this, free healthcare, free everything, free. Mitt Romney's like, dude, how do you run as the adult? How do you run as somebody who's not Santa Claus? You don't. So I guarantee I could win the presidency, right? Nobody has to pay any taxes because Jerome Powell said he can just print it. We are um, we're hurtling towards Japan, folks. We are hurtling, uh, you know, the zombie. Once you're on life support, you can't get off it, folks. It's almost like the ventilators with people with COVID, man. The vents are bad, and we're about to get intubated, and it's about to get ugly, folks. So, um, this was a pretty good article. I mean, Howard Marks is a smart dude. You know, the Fed can't fake it uh, forever, and it's funny because there's a lot of sentences in here um, that you've heard before. So I'm not going to go through all this, but it's interesting. Those of us in the market believe that stocks and bonds are selling at prices they wouldn't sell at if the Fed were not the dominant force. So if the Fed were to recede, we would all take over as buyers, but I don't think at these levels. Of course, that's why this guy is dead, not physically, but his way of investing is done. When 2 weeks ago he just kind of sat there for 4 hours and didn't move, now I know why. Not because he was wearing Depends, but because he's like, it was kind of his swan song. He's done. There ain't no. He's sitting out in the recycling bin with my books, right? Look at this sentence. So anybody hear this ever in your career at Top Gun Options? Capitalism without bankruptcy is like Catholicism without hell. Sounds pretty interesting. Exactly, Marilyn. Who's going to buy our debt? You know, China. Nobody has to buy our debt, Marilyn. When you think about it, we just make it. The Fed buys it. The Fed buying treasury, folks. We eat our own tail. I just don't understand. I don't know. I just don't. I don't get it. It's very confusing to me. I think I'm a relatively smart guy, and I don't know. I don't get it. When you can buy your own debt, man, you're in, you're either doing freaking fantastic or it's ugly. And we'll see. Okay. Let's cover what when you can print money digitally, folks, it doesn't exist. It's fake. I don't get it. All right. Let's start talking about the banks. JP Morgan. So last week we talked about JP Morgan. We closed the existing JP Morgan bear call spread for a nice $3,600, 90% profit. Hit our SOP, right? 789. Let's look at some profit. JP Morgan, we added a 90.5, 91 bull put spread. I think I got filled on that one. Yep. So we're down a little bit. Well, it shouldn't be down on that much. 90.5, 91, right? 90.5, 91. Okay, I like. We might even get long-term bullish on JP Morgan here. It almost looks like EWZ, folks, doesn't it? I mean, a little bit of swings here. Yeah, so there it's like EWZ, implosion and then leveled off. So in a lot of things, Top Gun Options is usually early, right? I'm usually early with things, which can be good and sometimes not so good. But a month ago, I was talking to guys, a couple heavies, and they're like, 4 million Americans in the latest survey I saw last night aren't paying their mortgage. 4 million additional people. So, but from what I'm hearing and the way I understand things, it's the mortgage servicers that are in a lot more trouble than the banks. And the Fed and Uncle Jerome is doing this whole, you guys lend, we'll take on 95% of the risk, you guys hold 5%. And they're still being jerks about the 5% that they keep on their books. I mean, that's one of the reasons that PPP isn't a spectacular success. Not a super Mark Cuban fan, but he's right. The PPP was good thinking, horrible execution, right? So this is, yeah, I'm trying to refinance right now, and my God, with a jumbo, nobody's touching jumbo loans. Nobody, unless your loan is backed by Uncle Sammy. The banks don't want to talk to you. They're like, "What are you, nuts?" Click. Unless Uncle Sam is guaranteeing it. And to be honest with you, like I told you, I think last month, one of my buddies said, "I got to be honest with you, Wiz, the full faith and credit of the United States government ain't what it used to be." That's the biggest moral hazard, folks. We were the Ronald Reagan shining beacon of hope, and now we're turning into Japan. Yeah, long-term capital management. When genius failed, hopefully everybody's done the required reading, and you're starting to get behind the scenes here, right? So this is, Vic, at this point, nobody really cares about inflation. The one true hedge against inflation is what? It's gold. I can't believe I'm going to say this, but it's that made-up thing, Bitcoin. The It's gold. The only true hedge against inflation is gold, and obviously, clearly, you can see the GLD. Its run of late. Do you go buy some gold calls or GLD calls all the way out into the future? There's not even enough physical stuff. You can't even take delivery of the damn stuff anymore. It's all that's that, but that's kind of a house of cards, guys. You trade, like Jeffrey Gunlock likes to say, you trade paper gold. It is what it's worth. It's printed on. It ain't gold. It's paper gold. There ain't no way you're taking delivery of gold right now. So if you wanted to hedge against inflation down the road, you'd be in the GLD easily. I'm not a, you know, I'm not a super. We traded the hell out of the GLD years ago until the guy that predicted the housing crisis was named Paulson, somewhere back here. But you want to talk about billions? Paulson back here, super long the GLD. About 4 or 5 of his competitors, hedge funds, tried to put him out. They squeezed. They imploded the GLD, man, and he almost went bankrupt. So, you know. Yeah, folks, I'm not going to get into that. You can look at the GDX, the GLD, the GOLD. There's a difference between paper gold, the miners. The miners are an issue because it's humans, and I worked with, I did consulting for Meridian Gold down in Miami years ago. So yeah, exactly, Paul. That's a good reminder. In 2008, the GLD went from 1744 to 243. So it's folks, remember when you're talking about especially the GLD. Well, let's think about gold. What is it? It's a thing. It has value because we believe in it. If you landed from Mars and saw a gold bar, what would you try and eat it? Could throw it in your nuclear reactor to try and get back to Mars? Do you sleep on it? Gold has no CEO. It's got no earnings. It's an emotional trade, guys. Gold it's emotional. So when you're trading something that is emotional, most things shouldn't trade emotional, right? JP Morgan, price earnings and cash flow and this and book value and future outlook. Gold ain't. Gold is none of those things. Maybe you can put it in a pillowcase and swing it around and beat somebody with it. Other than that, it serves no purpose. So just be careful with that, right? There's not that much gold in jewelry and electronics. There's more. What would you do? SLV. It's silver, right? Silver has more electronic and computer stuff than gold, right? So, anyway, this is. I'd look at the SLV if you're thinking more of an electronics thing. Wow, look at that. big rise in silver lately. Okay, but let's get back to JP Morgan. The banks, one of the reasons, it's almost like EWZ in the sense that they're skimming along a bottom here because they're either getting ready to lift off or they're getting ready to fall off. It's a binary trade at this point. It's like almost Japan right now. It's almost like a zombie. The financials are zombie-ish right now because they're waiting either to get shot in the face and blow their head off, or things are going to work out, right? This is, you know, it's a binary choice. Either the Fed, Mnuchin, and they've already done this, folks. I know for a fact funds that have been bailed out by the Fed. I've known there's been a lot of Westport, Connecticut, Chicago, New York City. It's like a duck, right? A duck sitting there looking majestic, cruising on the water. Underneath the water, there's a lot going on. The financials right now are a duck. If you don't think Mnuchin, Powell have been on the phone with Jamie Dimon and all that type of stuff, you're nuts. But I like JP Morgan. I'm bullish on those. So let's do an iron condor. Let's at least leg into an iron condor on JP Morgan. How many contracts do I have? So here's the current position. It's the 90.5, 91, 330 contracts out to May 29. p.m. May 29. Legging into an iron condor means we already have an existing spread on. You can see this stoplight here, right? Red, green, right? The red is the short call, the 90.5 calls. The green is the long call. That's kind of our upside hedge in case the financials decide to run. Okay. I think 80. Oh, that's right. Their charts. Charting's down like on the paper trading. JP Morgan. Probably the mid, 80, let's see, 86, May 29. There's probably not that much risk in there. Probably the 88s, 87.5, 330. Pretty good. So let's talk about the risks of this. The risks of this are kind of what we've alluded to. First of all, the overall market. Well, let's go through our trade plan here. Step one, strategic mindset. Let's stick with this, man. Big C, little b. Cautiously bullish. Was a little market, just like, what is it, SALT, NCB or whatever. Neutral, medium size N, big cautious, little b. That's my strategic mindset. Target is JP Morgan. Commit criteria. The banks have been provided enough liquidity from the Fed to meet just about everything. Remember, folks, since the 2008 financial crisis, what happens once a year? Wink, wink. A stress test. What has happened to the financials every year? Wink, wink. They pass the stress test. Trust me, when you're dealing with Wall Street and a Washington inspection, hey, fellas, let's go drinking tonight, the night before our, quote, stress test. Oh, did you leave that envelope of cash on the table? It's not mine. Whatever. My point being, the Fed has picked it. Remember Mnuchin? What was it not this last Christmas, the one before that, the Mnuchin massacre. He's like on the beach in Mexico City. He picked up the phone and called Jamie Dimon. It was Blankfein at the time at Goldman Sachs. Like, hey, how you guys doing? Do you need any cash? Are you capitalized? That's what's happened. So that's the main reason that these financials have just held up is they literally have the full faith and credit of the United States government. So Christina, yesterday you said if SPX passed 2,900, we would be bullish. No longer think that. I do, but we haven't hit that. We're at a triple top here. What I said, Christina, I think word for word is if we hit it with some airspeed. We didn't. We hit it and stalled. So there's a difference between going through a level with airspeed, and there's a difference between hitting it and going through it a little bit and stalling. So right now the bias is definitely not super bullish. It's a little neutral-ish, right? When you see a when it fails, right? If we hit it with airspeed, bullish. If it fails, it's not bullish. Does that make sense? So 2,900 to 2,950 are definitely ceilings for now. And like I said, I'm clearly not watching this. I'll get off the line here and get on and listen to what's going on here. All right, so that was a hell of a long commit criteria. I could have cleaned that up a lot tighter. Step 4 will be the tactic. What is the tactic? We are legging into an iron condor. We have an existing bear call spread up here, and I'm going to add a bull put spread down here. An iron condor is a range-bound tactic. It means, these two lines are the football field. This football player can run all over the place, just don't step out of bounds, either to the up or to the downside. The good thing about an iron condor is you're essentially having, or not even having, a hell of a lot more than that. You're cutting your risk down significantly. How? Well, let's take a look at the risk of this trade. Let me click Analyze of the bear call spread. This trade risks $1,100 to potentially make $5,300. Okay. Let's take a look at the metrics of this spread. We are risking 10, let's say 11 on that side. So if you're not familiar with an iron condor, right now you're doing math going, oh my God, Wiz, that's risking $22,000, and you'd be absolutely, completely wrong. It's not. And we'll talk about why in a second. But let's review step 5, our tactical employment. I'm looking to sell 330. Why 330? I like a nice balanced iron condor. Sell 330 of the same expiration of the bear call spread. Sell 330 of the May 29, 88 puts. That's me saying by next Friday, we are above 88 on JP Morgan. If I'm wrong, something bad happens, the financials implode, whatever it is, Jerome Powell wakes up and says, I just can't keep supporting all this crap. We're going to buy these downside puts. So I'm neutral to bullish on the market and JP Morgan. I'm using puts and it's a spread. This tactic is a bull put spread. Now you'll notice down here, it's also a credit spread. I'm getting paid to do this trade. I'm bringing in a credit of $5,610. Okay. Now I'm going to try and get filled on this trade, plus or minus probably about 2 cents. The lowest I'll take is about 15 cents to the downside, and the highest I'll take is about 19 cents to the upside. Okay, so that's my plus or minus is what I like to say. Let's talk about the bad while we're on this screen. When would I potentially eject out of this trade? I simply double the credit that I take in. If I get filled on this trade at 17 cents, I would potentially eject if it goes up to 34 cents. Why? That's me. Why? In aviation, in combat, in trading, if you know how you battle complexity, simplicity. You have acronyms, you have quick math things to be able to help you. That's some quick math. That's pretty damn cool. Remember, folks, we want all 17 cents, right? We want this trade to, quote, expire worthless, essentially at zero. That would be nirvana, but we're not going to let that happen. Why? Because in a credit spread like this, my SOP says I'm going to close this trade if I'm seeing a 70, 80, or 90% profit. Why do I have 3 things up on there? Because we could wake up tomorrow and it spikes down or up and it's at 90, right? It might not, it might see 70, 80 for a second on its way to 90. So that's why I say 7, 8, 9. right? Or it just kind of drifts around and kind of hits 70 eventually, right? That's the boiled frog type of thing. Yeah, it's at 70. All right, I'll close it. So that's why I say 7, 8, 9. If it's fallen in that window, do not try and squeeze every penny out of this trade, right? Pigs get slaughtered. I've sat in spreads like this before and said, it's got 2 days to go, another $300. I want that $300. And you take a 90% winning trade and make it a 100% loser. I've done it. It sucks and it's awful. And you don't ever want to do that again. That is a tough lesson learned, right? Christina, when you say to get out, do you mean to get out of the whole ticket or just the losing leg and ride the profitable leg? Christina, it depends. You have to make that decision as the pilot in command in that moment. Let's look at this bull put spread. Let's say, breaking news, Jamie Dimon is Satan and the stock's starting to implode. I would close the short put as if I could before it runs away and hold the long puts, right? As the stock implodes. Okay. So it depends. If you have to be Johnny on the spot in order to manage a losing spread like that. Sometimes it's just, especially if it's a gap move, sometimes it might be too late. Sometimes because the margin requirements, they won't let you, close that. You might not have enough coin. So you need to manage that at that time. So that's one of those on-scene commander type of things you're going to have to make. Okay. All right. Let me grab a screenshot of this. Yeah. Well, we do. We move things around at Topkin Options, so that's probably why things are moving around on this spread. I mean, JP Morgan's a kind of a liquid name, so I'm not going to say we're taking credit for all that movement right now, but we got 464 people in this room. You can end up moving things. All right. As soon as I click on this analysis tool, the first place our eyes go is right there, $10,890. That's the max risk in this trade. However, it's not the max risk of an iron condor. Why? Because if this bull put spread is in trouble, guess what most likely is happening? The bear call spread is doing fantastic, right? So that's why I'll show you the whole iron condor here in a second and what it looks like. I just wanted to grab a screenshot over here. So the max risk, the answer is no. Whoever just asked that, would I do this as a standalone trade? No, I wouldn't. I like the iron condor. The risk to reward in this is a little too high for me to do as a standalone trade. I would prefer to do it as an iron condor. Okay. And yeah, you could maybe put that on as its own or as one together. Larry, Wiz, the bear call spread expires May 22nd, and this bull put spread is for the 29th. Doesn't matter for the dates are different for an iron condor. Larry, you didn't come or watch last week. We closed last week's bear call spread for $3,600, 90% profit. So this is a new one. You're a week behind. Okay. All right. All right. So let's take a look at what the entire iron condor looks like. The 90.5, 91, right? 90.5, 91. So let me add option. Make sure these are calls and these are calls. Make sure we have the same amount of contracts. Same expiration. We selling the 90.5 calls and buying the 91s. Selling, buying, everything looks good. Okay. All right. So you ready for this magic? So you saw the bear call spread is potentially risking 11 grand and the bull put spread's risking 10 grand. So that's $22,000 in risk, right? Wrong. Take a look at the risk of an iron condor. You ready? 3, 2, 1. $5,300. What? You heard me. The max potential loss in the iron condor isn't those two spreads put together. right? So, you know, this is, this is beautiful tactic here, right? The dotted line right now is the current price of JP Morgan. Okay. So remember, I call this a football trade. What do I mean by that? Pretend these two things here are uprights, right? There's your short, there's the bear call spread on the right. There's the bull put spread on the left. Okay. There's two break evens technically, right? Because there's a break even for the bear call spread and there's a break even for the bull put spread. But folks, even poor old Charlie Brown ain't this unlucky. You can't kick a football and in flight the football go through a meat slicer and both spreads lose. Even if you're the Chicago Bears kicker who sucks, it ain't that unlucky. Only one thing can happen. Exactly. Both sides of an iron condor can't go negative. It's physically impossible, right? The worst thing that can happen in an iron condor is one of the spreads are in trouble. So if one of the spreads gets in trouble, the other one is obviously not in trouble and it's making money. Yeah, the double doink. Exactly. Would a wider iron condor also make sense to increase the chance of success, even if a lower profit? Absolutely, guys. So if you just widen your upright out, exactly. Maybe make, and folks, I there are people who trade 75% iron condors. They're so wide you can drive a truck through them, and they do it consistently, and they make money consistently. However, the one time they're not paying attention and it shanks outside and take the max loss, it's going to hurt. You have to be careful racking up a bunch of small winning trades with really, really wide iron condors, and then you wake up one day, breaking news, Jamie Dimon's on a plane to the Cayman Islands with all JP Morgan's cash, the stock's at zero. You will get blown out. Iron condors are great until when? Ready for this blinding piece of brilliance on a Tuesday morning? Until they're not. Right? Iron condors end, folks. A stock is range bound for a reason and it ends for a reason. So, be picking up nickels in front of a steamroller in your Superman cape is fun until your cape gets caught. So just know you got to be Johnny on the spot. How do you manage an iron condor, Wiz? I'm glad you asked. That's step 7. I don't manage an iron condor. What are you talking about? I don't manage an iron condor. I manage it as two separate spreads. A bull put spread has an SOP of 789 for profit taking and double the credit that I take in to eject. A bear call spread has a 789 SOP or double the credit to eject. I manage these as two individual trades. Does that make sense? Let me grab a screenshot of the whole iron condor so I can put this on the replay page, and then I'll send out the bull put spread via text and email. Yeah, it's a very good folks, as we're kind of wallowing around right now, the high and the low and retest and up, and it's a good trade. However, it's a good tactic for a range-bound market. However, I will say again, iron condors are great until they're not. And this one's a little skewed, to be honest with you, right? The 92.5, 91. So let me hit you with this. I would not do this one today. What? Meaning go up a little bit with what Slash was just saying on the bear call spread. I'm holding the bear call spread that I have right now for I think it's fine. But if I were to do this today, take a look at the chart. Probably 93 and a half. That's probably what I do. Let's take a look at that bear call spread. 93 and a half. So there you go. That's a more balanced iron condor for JP Morgan. Risk in 66 to potentially make 99. Good risk to reward ratio. And as Slash asked, it's a little bit more conservative. right? Yeah, like Jeff just said, I like to fly offensive combat spread on Wiz, not parade, meaning he's not following. You got to fly and fight your own airplane, right? Patrick, in the TGO training manuals, it says to choose strikes for bull put spreads above and below the current share price. You are now always choosing strikes out of the money, trying to understand why the tactic changed since those manuals are written. I don't understand what that means. It says to choose strikes for bull put spreads above and below the current share price. I don't think it's written like that, Patrick. Why would you? It makes no sense for a bull put spread. I think for the Iron Condor. That's exactly what you're doing. You're choosing strikes that are above and below. The short put and the short call clearly have to be above and below the strike price. I don't think that's so. Okay, Pat, if you can show it to me, I agree. Jeff saying he's misunderstanding the manual. Yeah, I don't. If it says that, it's absolutely 1,000% wrong. And based on the people who wrote that and me reading it, I don't. So, JC. So if one of the spreads hits your SOP, do you close both of them? No. So it's physically. So remember, folks, if let's say JP Morgan goes down a little bit and this bear call spread hits my 7, 8, 9, I close that one. This one probably ain't profitable. Okay. I'm not even going to get into this, guys, about maybe rolling an iron, like, hey, well, this profitable leg, maybe I could roll it down. And man, there's a 9-hour lecture we could talk about if you wanted to, I'm not going to say manage an iron condor, but to do what? To manage, let's say JP Morgan starts going down a little bit and your bear call spread hits your SOP. I close it. Go on, take the money and run, Steve Miller said. Some people might roll those strikes down to make money in this. And I'm not a roller. You can do it, but you can manage it like that. Paul, so should we group the Iron Condor in 2 separate spreads together to manage on E-Trade? That's exactly what I do. It's exactly what I do. Well, I mean, sometimes I keep it on there as an Iron Condor just because I have a lot of positions on there and it's all on one line. But when it comes to managing it, I ungroup it, or I group it as 2 separate spreads. This, actually, let me get this on here. Let me fire. Whoops. Yeah. Hold on. Let me do this over here because I want to get this in here. 88, 87 and a half. 88, 87 and a half. Yeah, I'll answer that one in a second. If you're doing the full, and it's at 15 cents, of course. Now it's at 14. Man, you guys push this thing all over the place. The answer, if you're trying to do the Iron Condor right now because you didn't have one of the spreads on, which spread would I put in front first? I flip a coin. If you're putting an iron, it doesn't matter. Or you can put that entire ticket, folks, can go in as an order. This can be an order right now for JP Morgan. I'm going to tell you that you will have a better chance at a fill if you put the bull put spread in and the bear call spread in as 2 separate trades. You can get filled as the Iron Condor ticket, but you usually get better pricing with 2 separate. You see, that's 2 separate spreads here, folks. There's a mid market up here and there's a mid market up here. If you're doing the Iron Condor, you're trying to find a mid market of 4 legs, which computers do. I'm just telling you, after doing this for 28 years, I break it up into the individual spreads. Okay. JC, so what do you do with the losing half of the trade? I don't know. I already briefed what I would do. If it hits double the credit and my commit criteria have changed, I eject and I close the trade. If it's losing, but it's not hasn't hit my eject and it's just quote down money, I don't do anything. Folks, remember, I just did a trade plan for this, right? It was way too long, the commit criteria. But remember, folks, if your commit criteria change as to why you got in that bear call spread or the bull put spread, you close the trade. That's what you do with it, right? Good catch. I absolutely do these all or none. I hate partial fills. I hate having 30 here and 120 here. It's awful. The handling is AON, all or none. I can't stand partial fills. They drive me nuts. So yes, absolutely. Folks, I can tell some of you have not watched the Iron Condor training in the Full Throttle Breeze. So again, this in the Breeze, I like to focus on the market and what's going on. You got to do me a favor, because this shouldn't turn into a full throttle training session on Iron Condor. So some of the questions that I'm seeing means that you haven't watched this, which means you should watch this. Everything you're asking right now is covered right there. Okay, so please do me a favor and get in here. Send to all. Ann already answered that. So folks, we got to listen, folks. I said I have no problem with the current JP Morgan bear call spread. And the initial Iron Condor that I showed on the screen that I worked with for 15 minutes was with the existing bear call spread. So, and what I said was I would not do that one today, the 90, whatever it was. I would probably go up a little bit. So this is the one that I would do today. Does that make sense? That's kind of how I explained it. Andy, I think in the beginning of June will be another round of Full Throttle Breeze. Yep. All right. Let me go over here. I need to grab this and send out an email, and right on time. Look at that. Cracking the whip and getting back on time. And of course, it's running away from me here. Let me grab this. Oh, let me, no, I do. I have the screenshot of the Iron Condor. Okay. Any other questions, concerns? Oh, by the way, as we have accelerated retirement tomorrow. Like I said, we're not doing a weekly debrief on Thursday. If there's anything going on, I'm flying from here to, I think, Tallahassee to Fairhope. If there's anything going on, I got my cell phone, I got my E-Trade stuff all over here. I mean, hell, I can be up at altitude trading. Okay. I got to send this out via text and email. So what else do we have here? Let me go through. Wiz, if the puts that expire this week are the same prices as puts for next week and the calls are within 2 cents, why not put the trade on for this week and reset another week? Peter, knock yourself out. That's you're the pilot in command of your aircraft. The 87 and a half is only 1 cent credit less than the blah, 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 less risk. Also, yeah, John, that's, yeah, absolutely. If 50 cents is only a penny and you feel it's less risk, absolutely do it. Okay. No more time for EWZ, guys. I have to sit here and send out a text and an email alert. So I was thinking about legging in an Iron Condor on EWZ. Already sent that out to the folks, the Afterburners and the Max Afterburner folks. So, all right. Okay, let me go. I got to go. I'll send this out via text and email. You should get this within a couple of minutes here, and then I'll have the replay posted on the page here, and then we'll do accelerated retirement at 1 o'clock tomorrow. And like I said, there's some trader festival or something like that. I thought I canceled all these things, but I'll be doing that this afternoon. And then I'll, if I get anything interesting from the cliff notes of my buddies listening to all this crap, doesn't look like it's too exciting. So, yeah, like watching paint dry. All right, what are we in? Primary live trade brief. All right, guys, I'll get going so I can blast this out. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. I'll see you guys tomorrow in Accelerate.